Hello investors, today I'll speak about the best dividend stocks for this year. So there is a list of best dividend stocks for now. It's the First American Co-op, JPMorgan, BlackRock, Texas Instrument, Lockheed Martin, Home Depot, Union Pacific, and today I will choose a few stocks that I'm personally hold in my portfolio. Let's start with the first one. It's Texas Instrument Incorporated. Its current dividend yield is 3%, dividend growth is about 18%, and EPS growth is more than 60%. This stock once famous for calculators. Texas Instruments earns most of its revenue today from manufacturing semiconductors, and Texas is the world's largest maker of analog chips. While many other technology stocks have been declining in 2022, Texas has withstood the storm fairly well. The stock is about 24% off its November peak, and its largest price drop in the last decade is 30%, make it the most stable stock on the list. So all the other have dropped off the 37 or more. The stock is also outperformed S&P 500 by 8% per year over the last 10 years. So it makes it one of the best performing stock on the list. And let's check out its parameters. We can see that its financial stability is quite good. Its debt to EBITDA ratio is less than 1, interest coverage 52, very impressive, so any problems with that for this company. The gross margin is 69%, net margin is also 43, so the profitability and marginality very impressive for this company. Also the growth rate, the revenue, EBITDA and EPS in the past was very nice, and the EPS and the revenue for the future, the forecast are also showing us that this company will continue to grow. The current value, PE ratio is 18 and PS ratio is about 8, so not cheap stock, but anyway. Let's check the dividend. The payout is less than 1. It's telling us that the half of its net income the company pays as dividend to its shareholders. So of course there is a possibility the company will continue to grow its dividends. And let's check out the chart in my mind. Let's go to the weekly time frame. After the pandemic lows, it was a racing channel, then it's broken, and we have here a correction. So the correction itself, it's in my mind, it's the wave A, then bounce B, and there is a possibility that we will see another correctional wave C here. And all I can tell you, the target of this wave, let's check the Fibonacci levels. I think it's about 100. So if the correction will continue, its target is 100. Also there is here a horizontal level at the huge cluster here. It's about 200. So if the correction won't continue, so the target will be at least 200s, and in this case we can see a nice bounce for about 10%. So Texas Instruments for me it's attractive, very impressive marginality, nice dividends, and that's the reasons why I continue to hold this stock in my portfolio. And let's continue with the list. There is another nice stock here. It's JPMorgan Chase. Of course, it is one of the largest financial institutions in the US, offering retail and commercial banking, wealth management and investment banking services. JPM offers a good dividend yield and has sustained excellent dividend growth over the past years. And let's pay your attention that JPM has been growing EPS at a healthy average rate of about 15% per year last 5 years. And also just be aware that the stock's current high yield is partially due to the 35% pullback in its price since October 21. So very attractive, nice dividend yield. Let's look at JPMorgan a little bit closer. We can see that debt to EBITDA ratio less than 3, but the cash to debt ratio is about 2. So with the data in my mind, it's everything clear, everything fine. Net marginality, very impressive. more than 30%. The growth rate, here, look here that it's negative figure, so it's not so good, but in any case, anyway, the dividend is still very high. The PE ratio is 10 and the PS ratio only 3, so it's very cheap stock. Regarding the dividends, yeah, payout is 30%. The dividend yield is fine, and also about 12%. The company continue to show a nice growth rate in its dividends. And let's look at chart of JPMorgan. So what I see here in my mind, here we have a major support level. Yeah, it's 120. Here it was the resistance level, then a support level, and now it's became a resistance levels. I hope that it will withstand and not broken down. Anyway, nice dividends of more than 3%. And why not? Because also now the interest rate in the US are rising. We know then when we see growing interest rates, so most probably the profit net margin of banks will usually also show a nice growth. So I'm continue to hold this stock in my portfolio. Let's continue to check these stocks. Look, here we have a Union Pacific, but the dividend yield is 2 and 5%, not impressive for me. Look at Martin, nice stock, but it's a defense stock. I'm not interested in investing such a sector. And let's see another stock. For me, at Home Depot, the largest home improvement retail in the US, Canada, and Mexico, with more than 2,000 stores. HD is one of the largest consumer discretionary stocks. Also, HD has sustained an average dividend growth rate of 16% over the past 5 years, and one of the best payout growth rate on this listing. Meanwhile, annual earnings were up by average of nearly 20% over 5 years. And as the retail and housing markets cooled in this year, so did shares of Home Depot. HD is down more than 30% from the December 22 all-time high, offering dividend investors a great opportunity to buy a company with a compelling growth story. And let's look at the chart of Home Depot. In my mind here, look at this. We have a racing trend line, so a trend line for growth. It till 2012. For the last 10 years, this stock it's a growth stock. Yeah. So until this trend line won't broke, so we can't say that we are in a downtrend. So now it's in my mind quite safe to buy the stock. Also here it's 300, we have a major support level, and I hope it will withstand in the future weeks. So also what I can say, no, nice dividend, nice consumer discretionary. It's defensive sector, and also it's one of the reasons that I'm personally continue to hold the stocks. And another one, the PS ratio, price per share, it's now 2, so very cheap. Check this out at the chart. It's already at the level, so 2015. So why not? In terms of price per share ratio, for me it's very attractive, and I'm continue to hold it. So it was dividend stocks for today. If you're interested in US market, in dividend stocks, American stocks, and you can subscribe to my channel. And also in my channel there are many videos about stock dividend, about stock analysis, technical analysis, S&P 500, dividend stocks. So thank you for watching, and have a nice day. Bye.